Welcome to Taking Care of Lady Business, where we put the business back in lady business. Hosted by Jennifer Justice, founder and CEO of the Justice Department, a management strategy and law firm that works with female and woke male entrepreneurs, executives, talent, brands, and creatives to build and maximize their wealth, focusing in the areas of tech, consumer product, finance, media, entertainment, and fashion. Jennifer interviews entrepreneurial women who have done it all, who will be sharing their secrets on all things business, especially as a woman. These highly successful women will share strategies and insights, including what not to do and what it takes to win. And now, here's your host, Jennifer Justice.
Hello, everyone, and welcome to this episode of Taking Care of Lady Business, where we're putting the business back in lady business. Today, we have on the show Lauren Taylor Wolfe. She's a co-founder, managing partner at Impactive Capital. Hi, Lauren.
Hi, how are you, Jennifer?
I am good. Thank you. Thank you so much for being on here. Lauren has a very interesting job as an activist investor. Because I don't even really understand it, I'm going to be learning a lot today. I'm going to have her tell us A, what that is, and B, how she got into it.
Sure. So I've been an activist investor for just under 20 years now, which seems crazy when I say it. So what is an activist investor? An activist investor, they used to call them corporate raiders, things like Carl Icahn. Back in the 80s and 90s. And
it has such a negative connotation. And
it had a very negative connotation. Of course it did.
Yeah.
Back in the 80s and 90s, they would take big stakes in companies and then do what's called greenmail, force the company to sell itself or buy back stock from the activists. And then it's really evolved over time. Our approach has been really collaborative and friendly, where it's almost like a private equity approach in the public markets. And what this means is we invest in all public companies, but we do so in a very concentrated manner. So we manage about $2 billion and we only have about 8 to 12 investments at any point in time. And what we do is we take a large stake in a company where we own about 5 or 10% of the company. And then we engage with the management team and the board of directors. And sometimes we go on the boards of these public companies and we suggest capital allocation initiatives, as well as sort of impact-oriented social and environmental and governance-oriented initiatives that drive a better return, that accelerate the overall returns for shareholders, for customers, and for employees alike. And so, our goal is to generate a very high return for our LPs, but then also help the company become even better than what it could have been. So that's sort of, that's how activism has evolved. You still have some what's called like sort of hostile activists, but our view is, that really doesn't suit my personality necessarily. I'd much rather try to influence with charm and sort of the substance of my ideas. And so that's what we do.
And when you talk about capital allocation, what do you mean by that?
Sure. So capital allocation is really how a company puts its own money to work. So, companies have what's called a balance sheet, right? They have a lot of cash that they generate from, profits, and they can borrow money, right? So they can take out debt, and then they put that money to use. They could invest in R&D to discover a new, pharmaceutical. They can invest in innovative technology, or, they can make a big acquisition of another company to accelerate the growth of the business. Mm-hmm. And so capital allocation is really thinking about how, the company has almost infinite possibilities of places that they can put their money to accelerate profitability. And our responsibility when we think about engaging around capital allocation, we come to the table with interesting ideas around what is the best use of the capital, meaning what is going to generate the highest long-term return, not a quick sugar high, not a quick, sell the company or buy back stock sometimes for me. It's what is going to generate the greatest long-term rate of return for that company with capital today. So that's how we think about it.
And then are all of these more like, ESG, like people keep hearing this term when it comes to the environmental, social, and governmental, right? That's what those ESG stands for.
So it's environmental, social, and governance change. And when you think about it, first of all, there's a lot of BS around ESG, right? It's in the papers, all the time. A lot of companies or investment managers feel that they have to be doing ESG. When I launched the business in 2018, we were the only people really doing this proactive ESG in a way that drove returns, and everyone thought that it was a fad, and people doubted us. And then, sure enough, in 2020, in the pandemic, with the Black Lives Matters movement and a lot of the acceleration around the importance of the environment and Biden taking over and rejoining the Paris Agreement. So a number of these things caused ESG to be not necessarily a fad, but really a business imperative. And we can go into each of these things. But at the highest level, when we think about impact, I almost think about it like a flywheel. Let me back up and go ESG. Environmental, when you think about environmental change, right? Companies, when they pursue their business strategy and their business plans, whether you're a manufacturer to a technology company, you're going to have some impact on the environment. You can be running servers hot, or you're going to be manufacturing widgets. You're going to have some impact on carbon emissions, on air quality, on water quality, on land use. And so understanding what that impact is really important for a company so that they can both disclose that and set goals around that for the purposes of reducing their impact on the environment. Similarly with society, like when we think about the social issues, a lot of it is like, for instance, as an example, labor intensive businesses, it's how can you pursue profits in a way that lowers any negative impact, reduces the harm that you may inflict on society, or that improves the way that you're celebrating diversity, equity, and inclusion. And then from a governance perspective, this is really at the very top, the highest levels in a boardroom of, how is the board being managed? Are there enough checks and balances to make sure that long-term decision-making is optimized? Is executive compensation linked to the right things, right? So we are very excited about linking executive compensation and bonus plans to some of these environmental and social initiatives, as well as the profit motive of the business. And so the environmental, social, and governance ideas are really sort of, this is more making sure that in a capitalist society where we are not pursuing capitalism and profitability and shareholder return at the expense of all these other stakeholders.
Right. Yes. Okay, good. You literally just nailed it. I was like, so basically you're trying to make the company better, but still have big returns.
Yeah. We think about it like almost like a Venn. We think about it. It's so like there's this notion of shareholder primacy versus stakeholder primacy.
Right.
And in like the Milton Friedman version of the world, which many people in our generation have been educated in both undergrad economics class and finance classes in business school, it was the sole purpose of a corporation is to generate profits for its shareholders. And I think what we've learned is that now, like, first of all, very few people in our society can truly create wealth as becoming shareholders. That's changed more recently because of all these platforms and Twitter and Robinhood and the public, which, I much prefer to Robinhood. So big plug for the public, which is more community-based. But the point is, as we go from shareholder primacy, which was the sole purpose of the corporation is to generate profits for its shareholders. When I think about stakeholder primacy, I think the purpose of the corporation is to generate profits, but it should be able to do that while also improving outcomes for employees, for customers, for suppliers, and so all these different stakeholders. So when we invest in a company and we have an interesting idea around an environmental, social, or governance change that drives a return, we think about like almost like a Venn diagram, but with three circles where employees, shareholders, and customers can all benefit, where those three circles would overlap.
Right. Right. So, I just had somebody on the podcast last week and she's had such a great point, and which is we've never seen capitalism where women and people of color are running the show. Right. So we see the bad things and the negative things about it. What if we all participated in that power of capitalism? What would that look like? And so you're doing it from such a high level, like, as female founders and me representing mostly just women, it's like, we're just trying to raise $25,000 for angel investing in startups. Like now you're doing it from this massive level. And hopefully we'll all come together much faster than the 200 years it would take us make the same amount of money and, forget about the wealth gap.
Totally. So I've worked in a male dominated industry where I'm usually the only woman in the room. And oftentimes I was greeted and I was like, oh, are you the marketer? And I'm like, no, I'm the investor. And so, it's less than 2% of hedge fund assets, dollars of assets are allocated to women, and the number is lower for minorities. So there is huge imbalance, but I think finally the tides are changing, and the more and more people see folks like you and me running businesses and running investment firms, I think will just drive. You have to see it to actually follow it, right? There was a study done where an economics department hired half female professors and half male professors. And overnight, the enlisted students in the economics in 101 doubled or tripled from like 15% to 30% and continued to grow. I think, part of, I go and I speak to business school classes and I speak to a lot of young women's organizations. And because I think we just have to show them that this is an opportunity for them. This is a role this is a path they can follow. There are others like them. And frankly, for me, it'll help because from my perspective, there were so few women, I think, hedge fund managers and activist investors, and I'm one of two of them, but there's really very few female investment managers and activists because from people who give me money, right? The allocators, the large pension plans and endowments and foundations and high net worths that, we now manage about $2 billion. We've raised a lot of that, but we've also performed and generated performance on what we've raised. But the people who allocate that capital, they're pattern seeking animals, right? They're so used to seeing a white male come in and ask for, raise money and then go out and invest the capital. And so their recognition of success had always been in that format. And I think there's this unconscious bias of not having the experience of seeing women in this role being successful. And so I think the more younger women see that, the more they're going to follow that. And we see that with Sarah Blakely of, Spanx and even Reese Witherspoon with, her sale and the Honor Company. And so I think the more and more there are these professional successes and female, self-made women, I think we'll get more of them. The one thing I do, even though I really don't want to encourage this visual on YouTube, but look at this. This is, I'm going to send you this because maybe I'll post it. But so we go into a boardroom and we ask about diversity, equity, and inclusion. What does your management team look like through the ranks? Right. And we help companies write their sustainability reports. We help them communicate their sustainability efforts and link it to profitability and return. And only one of our companies so far has disclosed the complexion and gender of the company, the entire company of 26,000 employees throughout the ranks, right? This McKinsey and Stanford did this study. So I don't know if you could see this, but this is where the starting ranks within a corporation, how it lays out. And I could read it to you. It's 36% white men, 16% men of color, 31% white women, and 17% women of color.
Right.
And then you go to the C-suite and somehow all of a sudden, it's 70% white men, 9% men of color, 18% women, and 4% women of color. And so what happens between those, levels, I think is where a lot of executives and board members should be focusing their time and thinking about how can I attract and retain and develop more women and men and women of color. Because what we know is diversity drives better outcomes. So that was a long, really long-winded answer to your original question.
No, you're totally speaking the language and the whole, the Justice Department and why I started the podcast. And, and I think ultimately people have tried to be I'm going to train them, et cetera, but we just need white men to step aside and let us do the job, half of it. And it's and that's not something you have to agree with because I know I'm very polarizing in these things. We just need to start our own companies and show them how it's done, because your point is so right. That pattern recognition of who I give money to, I give it to the white man and he makes me a bunch of money. I've never, I give it to my wife, she spends all my money, you know what I mean? And so it's this pattern recognition, but we also can make money too. And there's a ton of studies from Harvard, et cetera. So it can't just be a bunch of white men hiring into their patriarchal companies. They have to step aside. Many of them could retire and it would be fine.
It's so interesting. Yeah. So I have so many thoughts on that. I wouldn't agree necessarily that white men need to step aside. I think they need to, I do think they need to invest in and elevate others, because I just think it's unrealistic to expect them to step aside. They have to be part of the solution, and they have to see that actually having more cognitively diverse teams. And there's Scott E. Page wrote a book. He's a professor at University of Michigan. He wrote a book called The Difference and then the Diversity Bonus. And he basically proves empirically with data that more diverse teams, cognitively diverse teams, that have different experiences, different backgrounds, different education, but a lot of the time gender and ethnicity inform those experiences, they simply outperform on tests. They come to better conclusions, more successful conclusions, more accurate conclusions, and solve problems better. And so I think what we need is a lot of, white men dominate the senior levels of power and money. Yeah. And they need to realize that diversity is actually, if they embrace it, it could be a way to make everyone better off, but it's tricky. And then I'll switch to, I remember I have friends who are in the venture world who started something called All Raise. Yeah. And it was when women were like female entrepreneurs, and it was very widely reported, they would be demoralized in pitches with mostly like male dominated venture firms, or, partners at venture firms. And a number of female partners at venture firms, they bound together and they formed All Raise. And I was like, that's brilliant. Because guess what? Hello, calling all female entrepreneurs. I'm ready to back you. Here's what the opportunity, talent is evenly distributed. Opportunity is not, right? And so I am, there's this huge amount of talent up here that's going to be the next billionaire, female founder. And why, don't pitch these male dominated venture firms that are just going to make you feel bad about yourself and be demoralizing and inappropriate and harass you. Come to these all female, this All Raise group, or female angel investors. And so I think there's a huge opportunity to back these incredible female talented, incredible female entrepreneurs. And let's retain the economics to ourselves, because they're, they are just as likely to be talented and excel as men would. So
yeah. So I know. So it's more than just I probably said it too bluntly, just put you aside, but it's also let go
a little, let
go. Yeah. Okay. Yeah. Let's let go. Let's listen, let's include, and then go, you know what, maybe my time has come, maybe a little bit earlier, to step aside and leave room for somebody other than somebody who looks exactly like you. And then, yes,
that's a really hard thing to do.
Well, of course.
Yeah.
Of course, but that's why it's also building your own matriarchal system, right? Building it all so it works for you, like you have done. I mean, would you say you're one of two female activist
investors? Yeah,
that's insane. One of two. Okay, so we need a lot more.
In the public market side, but yes,
in the public market side. But that's crazy. That is crazy. And you're doing the work that needs to be done from the very, very top. And I'm sure it's not easy. I'm sure every deal that you do or investment you make takes a very long period of time, and the changes. I mean, you're probably talking years and years, right? In order
Correct. Yeah, we're making systemic change, right? So I'm working with an auto company, one of the largest auto dealers in the US. And I thought the angle, and so we have this whole capital allocation idea where there's this huge roll up, and it's a consolidating industry. So it has many, many years of runway for accretive M&A and growth, right? And share price appreciation. And then I went in thinking, this is going to be an environmental play. They have all these parts which can be recycled. There's some toxic chemicals, or we have to check that, make sure that they are recycling any chemicals, having a clean, safe work environment, particularly in their parts and services where they're servicing the vehicle and doing brake pad changes and oil changes. And I quickly flipped, our approach, because what I realized is in the parts and services business, which is when you go in and bring your car in for renovation or repair or maintenance, there's this huge secular tailwind, meaning cars today are more silicon than steel, right? You can't, if you have a fender bender today, 5 years ago, you call Geico, they'd say, okay, go to this mom and pop collision center at the side of the road. They'll fit you with an aftermarket LKQ fender. It's cost you $500 and you're on your way in a couple hours. Today, you can't do that because there's cameras and sensors and LiDAR and technology that's embedded throughout the body of the vehicle that you actually have to go to the auto dealer, which is the company that we own, because you have to be retrofitted for the technology. But there's a huge problem. There's secular tailwinds of demand to that auto dealer parts and services business. but they're only utilizing their bays where they hoist up the cars and do all the work. They're utilizing it 50%. Why? Because there's a huge labor shortage. Mechanics are retiring so much faster than they can attract new talent to the space. So we got curious. We're like, oh, why don't you pay your mechanics more? Like, you'll retain them, retain more and you'll hire more. Fine. Thanks, Lauren, brilliant idea. Like, we've done that. And so we peel back the onion. And we got curious. We went to the Bureau of Labor Statistics, and what we realized is that they were they were overlooking a candidate pool entirely, and that's women. Women represent less than 2% of auto mechanics, but they dominate the industry as customers, spending over $200 billion annually, and they generally mistrust their mechanics.
Yes.
And so what can we do right there? And then I went looking, I'm like, oh, this is like a no-brainer. So I went looking, and we saw, because, when you look at healthcare or the veterinary space or legal fields or even construction, which now is 10% female, when women participate in the labor force at a greater rate, productivity improves, output improves, revenue growth improves. And so we connected them with a number of women-owned and operated parts and services collision centers. We had them, they're the first publicly listed auto dealer to offer paid maternity leave. They're going to a 2-shift, during the day, which allows for childcare and elder care, 2 things which disproportionately fall on the shoulder of women.
Right.
And they've more than doubled their female mechanics, but that's like going from 2 to 4%. We need them to make this systemic change. This is good for business because it's going to accelerate growth in their most profitable segment. And it's good for the employee base because it's going to attract and retain more women who can make a ton of money. Mechanics can make over $100,000 a year in careers where they're naturally suited. Plus, as more of the diagnostic, management of cars happen on, for instance, phones and
like
iPads, you'll be able to diagnose what the problems are. Like that those skill sets naturally lend themselves to women. So anyway, that's an example of something
fascinating. I just had to take my car. So I impulse bought a car on Carvana in the height of COVID, like literally May 2020, because I'd gotten rid of mine because I was being environmental in New York City. And then I was like, oh my God, I have nothing. What if shit goes down? I got to go. And I hated buying it. I've hated owning it because whenever I've had to take it to the shop, now I actually grew up around cars and I actually know more about cars than most women do. And I'm not scared about cars and whatever, and understand what most parts are. But like I go in and they're like, oh, you need new brake pads. And I'll be like, acting like, and I'm Googling, I'm like, really? Cause it's, are they still the original, one from cause it's like less than 50,000. Well, you wrote, oh, really? I thought that it was at 70,000. And I'm Googling it right now because I don't, because we all know that we can get screwed and not knowing what it is. Turns out.
Did you like the Carvana experience?
Oh my God, it was amazing, actually.
They're good. They're very good at used cars, but
their competitor.
We have something called ClickLane for all your listeners out there. If Carvana doesn't know what you want, check out ClickLane. That's
I'm going to check it out because I'm going to sell this car soon, but I just have to be able to get a new one.
They'll buy it from you.
I don't want to own it. I want to lease it because I want somebody else to take care of it.
Yes, that's why I lease everything.
So these are all fascinating statistics. I love all of this. And so, but I think what has become extremely clear is that we need more women to be like you and help you. And so are women, you go to these business schools, are they interviewing to do a job like yours? I mean, how are you attracting them?
So a lot of the business schools have tracks in finance and investing and securities analysis. And so I go back, I speak to a number of classes, I teach some classes, and I recruit. We have a small team, but I've recruited. And I think so much of this is a confidence game. And I see a big difference between a lot of the men that I interview who have so much, it's almost overconfidence, but it's really just the manner in which they assert certain acronyms like, the EBITDA or the ROIC, the ROIC, or, and women, they tend to want to be almost perfectionists. Mm-hmm. They won't assert something unless they can do it to perfection. Yeah. And my view is, the delivery and the confidence in it is just, is so important. And I think that, sometimes it obfuscates from actually the substance. So I try to get through, we do a number of things. We interview people, we have conversations with them, but then when we are ready to, when we go through our sort of analyst interview process, we have the second phase after the behavioral interview where we talk stocks or talk companies that we're interested in. We have them do a modeling test where we give them, the 3 different financial statements, the balance sheet, the income statement, and the cash flow statement. We give them some transcripts, some, 10K filings, And we have them sit down for 5 hours and we say, build a quick model, give me some scenarios, tell me what information you'd like to ask or what you think. And like, what do you think about this? And then when we look at those models, we blind ourselves to the names.
Mm-hmm.
And so it's very interesting. So a couple of things happened. We interviewed just the natural numbers. There were 5 male candidates who applied for every 1 female. It might have been 6 to 1, actually.
Yeah.
And then a lot of women took themselves out of that round when they found out it was going to be a 5-hour modeling test where they had to do like a 3-statement model and like put it together. And they didn't know that we were blinding ourselves to it, but they were nervous about it or intimidated by it. And so, that was something we had to really think through. But what we do is we blind ourselves to it. So we're not judging we're taking out our like instinct about that person that we met, and we're just looking at the quality of the actual work. But I digress a little bit. I have a funny story because I think if women simply came to the table and even if you speak confidently about, honestly, I don't know, and I'd have to find that out. But here's what I do know. I think that would get them so much further because I like the best answer as an investor. The best answer is I don't know. If you don't know it, that's a really good answer. I don't know.
Yeah.
But I have a funny story. I had a friend who was the CIO of of a large bank's asset management. I just gave it away. But she was speaking on a panel, and she's like, I had about 100 direct reports, and there were like, 40 women or 35 women and 60 or 65 men. And I was just like trying to make a point. And she said, I asked the audience, who feels confident that they understand like the CAPN model or something, or who feels like they understand like the endowment approach to asset allocation. And then she's like, who feels like they understand breastfeeding? And of the 35 women in the room, probably like 30% of the hands go up, maybe 40% of the hands go up. And of the men in the room, of the 65 men, at least 65% of their hands go up. Well, and then like most women in the room are mothers. They had breastfed, but did they think they were an expert? Not really. And the men whose hands were up, they were like, I watched my wife breastfeed. I got this. And so I think like I've seen that a lot, this sort of theme of men will volunteer and take the risk and be like, I can do this. And then knowing that they have no experience with it, figuring it out on the job. And women can do that too. And I think they could probably do that better if I had to guess, because they're so afraid of not being perfect at it. They just have to go out and take the risk.
Yeah. Newsflash, men, if you're actually listening, none of you understand breastfeeding. Okay.
Correct.
0. I don't care if you watch somebody. I don't care if you're a doctor. I don't care if you're an OGYN. You do not understand it until you do it. Okay.
Yeah, exactly.
Oh my God. No, it's so true. I mean, there's all these stats, like women have to be 130% prepared, men like 70, like nailed it, and I see it, like I have boy girl twins. I see it in them. Like we were at a soccer game, my son lost and my friends were like, how do you think he did it? It's like, I was amazing. And then my daughter, like they won, but she didn't make a goal. So she was like, we were okay. And I was just like, okay. So I think that like, we just embrace this and know it, but then get over this and go like, you know what? It's okay to say, I don't know. I mean, this is why I started this podcast, because I literally like, there's all these terms of vernacular that you're served as you're growing up as a boy, and you graduate with a college roommate dad network. And it's like, that's what we're building, college roommate mom network.
I love that. Sign me up. I'm in the network. I couldn't agree with it more. And I remember, so I've been investing for so long, and none of my friends were in investing. They were in like, my closest friends were in like, some worked in publishing and magazines. Others worked at fashion brands. Others worked at like, Mac or in the beauty industry. And I remember when we were single and young and growing up, we were like, in our 20s, I said, I want to do a women's dinner because I think all of you have like, they were giving money to like stockbroker friends who we grew up with who were not smart investors.
Yeah.
And I was like, you can invest your own money. Guess what? You have this unique insight. You know which brands. My friend who worked for Estee Lauder said, you go and you research, you do all this product work. Like, which brands are going to sell, which brands are not going to sell. Like, you should invest in companies where the brands are ascendant. Or even like my friends in fashion. Oh my God, this company's discounting so much. Like, use the knowledge that you have in the fields of your areas of expertise and empower yourself to invest, right? And for most of my friends, I say just invest in an index fund, just plain and simple, and you'll do fine. But if you have a unique insight, if you're working, in like a data science space or something, you have unique insight to a company that's public that, you think it's going to is starting to really grow, or where, you have insight around, how they're hiring. If they're hiring really rapidly, it usually is an indication that they're winning business. Put your, leverage the insight that you have and monetize that insight. And so, but so many of my friends were like, the stock market, I don't know, it's too intimidating and scary. It's like, no, you just open an Ameritrade account or open a public account. Anyway, I think we can empower women. Women are like half of the workforce today. They have certain areas of expertise. They just have to be cognizant of it and have the confidence to monetize.
Yeah. And it's like, and be okay with like what, my kids have that green light account, like, and they invest in, and I was like, well, what do you use? And they're like Roblox. And I was like, they both have made, they put $10 in, but they both made like 50% returns,
Yes.
Because they play it.
Right. Yeah, no, I think the green light card is great. We have it for our kids. They do their chores, they earn money, and then they have to think about, what can you do with money? Well, you can spend it, you can save it, you can invest it, or you could donate it.
Yeah.
Right. Like, think about it. How do we want to do that? Where do you think is the right place to put your money? But guess what? If you spend it all, like, you can't invest. You're not going to make more money. You can like spend it today and get the lollipop, or you can invest it and have 3 lollipops in a month, or, whatever,
Yeah, exactly. No, it's so true. And I think that education equally from the very beginning, for girls and boys, and, letting women like, not be perfect all the time, and making them comfortable about that, I think is one of the biggest things, because as you said, if you can see it, you can be it. And, it's great that people can see you, women can see you doing this. So I so appreciate you being on this podcast. And I know that you actually have to go and do some real shit right now. So I'm going to close up, but I do have one more question, which I always ask everybody on here. And that is, what is the worst advice you've ever received?
First of all, if you can see it, you can be it. I'm totally stealing that from you. I didn't say that. You said that. That's great. The worst advice I ever got was when I was trying to start my business. All the men who had to like help me, and like at a lot of these investment banks, they basically, you meet them and they tell you, oh yeah, we think you can raise this much money, and we think you'll do this, and this is possible, this is not possible. I went to see about 2 or 3 banks, and 2 out of the 3, one which I use, all the men were like, don't expect to raise more than 50. I'm at 2 billion now. Don't expect to raise more than 50 million. It's going to be a slug. Tried to discourage me. And I'm like, Stacey Abrams actually has this saying, like, when you are so underestimated your whole life, you are simply conditioned to outperform.
Yeah, true.
So there were so many naysayers, and so many people were like, let me set your expectations. And I'm like, you don't get to set my expectations. Mm-hmm. I know what I'm capable of. And, so I think you'll get a bite, you'll get bad advice, you'll get good advice. But the bad advice was from those senior individuals at those firms that were like, you're not going to do it.
Yeah. Go ahead. Underestimate me.
Yeah, exactly. Okay. Like, you shouldn't do it.
We're so used to it. Like, go ahead.
Okay, you should probably go find some other place to work for. And I'm like, no. Yeah.
I love it. Thank you so much. I definitely learned a lot.
Thank you for this opportunity. I'm so excited to be part of the crew.
Thank you. So look, if people want to, know more about you, want to apply to work there, want to be you, want to be an LP, like, how do they find you?
Go to impactivecapital.com. You can learn more about how we invest, what we aspire to, what our mission is, and how to apply.
Amazing. Yeah. Well, thank you everybody for tuning in. This has been awesome. Let us know what else you want to hear. And until then, I'm Jennifer Justice.